Folks, Jamie Dimon just delivered a powerful message, and it's something you need to pay attention to right now. Dimon, as the CEO of JP Morgan Chase, gave some compelling suggestions on where to put your money if you're looking to both preserve capital and achieve high returns in the midst of growing uncertainty. As he emphasized, the risks of a recession are rapidly increasing, driven by key factors that we'll cover in this video. But even as these risks rise, there's a massive transformative opportunity ahead. If you place your investment strategically, you could see extraordinary gains on the other side. And remember, when Jamie Dimon speaks, the world listens. He's not just a powerful figure in business, he's one of the most respected voices in finance. So let's break down exactly what Dimon is warning us about, where the markets are heading, and how you can navigate this volatile environment to come out on top. To prepare for this video, we've reviewed over 25 different interviews with Dimon and scoured the latest insights, so you don't have to. Stick with us till the end as we break it all down. Plus, we have a featured segment on a company showing explosive growth, one you might want to start researching ASAP. Let's start with the recession talk. Jamie Dimon has been sounding the alarm on this for a while, and it's not just about the US economy. Europe, China, and the Middle East are all slowing down, and these economies are interconnected. A slowdown in one could trigger a domino effect that impacts the entire global market. And Dimon's point? This interconnectedness is something every investor needs to watch closely, especially those with global portfolios. Most S&P 500 companies, even the ones you think are just American, have exposure to international markets. From their supply chains to their revenue streams, international factors are critical. So even if you believe you're only invested in US stocks, the truth is, your portfolio is likely affected by global shifts. But there's more. Dimon's concerned about government debt. With US interest rates at multi-decade highs, the cost of servicing that debt is ballooning. If this trend continues, he warns, we're going to face some harsh choices. Massive tax hikes or cuts to essential services. Alternatively, the government could just print more money. None of these options spell good news for the economy. And then there's market volatility. Geopolitical tensions are rising, from conflicts in the Middle East to Europe's eastern borders, adding even more unpredictability to global markets. Dimon anticipates increased volatility, and you know what that means. Wild market swings. Fund managers are already making defensive moves, pulling money out of the markets as they brace for impact. And while these managers are retreating, there's a silver lining. High interest rates have also led to record levels of cash sitting on the sidelines. Once the opportunity presents itself, that money could flood back into the markets, fueling a major rebound. But let's talk about the longer-term picture. Dimon believes we're on the cusp of a massive shift, and artificial intelligence, AI, is at the center of it. According to him, AI is one of the most transformative technological advances of our time. Companies that don't adopt it will be left behind. JP Morgan has been investing heavily in AI, integrating it into everything from customer service to risk management, and he believes this is just the beginning. So what does Dimon suggest? He's hinted repeatedly that AI is where the smart money is heading. From Microsoft to Nvidia to IBM and Meta, these are the companies leading the charge in AI innovation, and they stand to benefit from the tech revolution. Nvidia's GPUs power AI workloads. Meta is using AI to optimize its platforms in future metaverse projects. IBM's Watson is pioneering AI in healthcare and finance, while Microsoft's AI initiatives are embedded deeply into cloud services and business solutions. These companies, alongside others like Palantir and Salesforce, are all leveraging AI to revolutionize industries. Dimon also talks about the balance AI will bring. Yes, it may displace certain jobs, but it's also creating entirely new fields that require advanced skills. For businesses, it's no longer just an option to integrate AI. It's a necessity to stay competitive. So while there are serious risks on the horizon, rising interest rates, geopolitical tensions, government debt, Dimon's message is clear. AI represents an incredible growth opportunity that could redefine industries for decades to come. But the risk can't be ignored. This is a time for caution and strategic positioning. Now, before we wrap up, let's dive into a sponsor segment you don't want to miss. American Aries, ticker symbol AAIRF, is a company at the forefront of tackling an increasingly pressing issue: electromagnetic radiation from our everyday devices like smartphones, Wi-Fi routers, and 5G technology. Founded with a vision to protect public health, American Airways has developed technology that reduces EMF exposure. It's backed by science, with over 1,000 studies documenting the harmful effects of EMFs in 8 peer-reviewed studies showing the effectiveness of Aries products. From partnerships with the UFC and WWE to growing celebrity endorsements, Aries is positioned to dominate this niche market. The market for EMF protection is growing, with over a third of the population expressing concern about these risks. And with their product sales skyrocketing from $2.6 million in 2021 to over $10 million in 2023, the company is just getting started. It's definitely worth keeping an eye on. In addition to these concerns, Dimon is raising red flags about the growing U.S. government debt. As interest rates remain at multi-decade highs, the cost of servicing this debt is ballooning, putting long-term financial strain on the economy. Dimon highlights that this situation is unsustainable. If left unaddressed, the U.S. could face tough choices: significant tax hikes across all income brackets or deep cuts to public services. Alternatively, the government may resort to printing more money, which risks fueling inflation and eroding economic stability. This scenario presents a grim outlook for long-term economic health, as it could lead to a vicious cycle of increasing debt and rising costs, which would be difficult to reverse. Dimon also warns about the increasing volatility in the markets, largely driven by geopolitical tensions. Conflicts in the Middle East, particularly in Israel and surrounding areas, and ongoing tensions in Eastern Europe, especially involving Russia and Ukraine, are creating widespread uncertainty. This geopolitical instability has caused wild swings in the financial markets, and Dimon expects this volatility to persist. As a result, many fund managers are adopting defensive strategies, pulling money out of riskier assets to preserve capital. While this may seem like a safe move in the short term, Dimon points out that there's also a lot of cash on the sidelines, waiting for the right moment to re-enter the market. High interest rates have encouraged investors to hold on to cash, creating potential for a surge in investments once market conditions stabilize. This could lead to a significant rebound, but the timing and conditions for that are still uncertain. Despite these looming risks, Dimon is not entirely pessimistic about the future. He sees a silver lining in one of the most transformative technologies of our time: artificial intelligence, AI. According to Dimon, AI presents a massive opportunity for companies that are willing to embrace it. He believes that AI has the potential to revolutionize industries across the board by improving efficiency, enhancing customer service, streamlining decision-making, and creating new avenues for growth. Companies that fail to adopt AI, Dimon argues, risk being left behind as AI-enabled businesses gain a competitive edge. For JP Morgan Chase, AI is already an essential component of its strategy. The bank has invested heavily in AI, integrating it into various operations, from automating routine tasks to developing advanced algorithms for trading and risk management. Dimon's message is clear: AI is not just a technological option for companies. It is a necessity for those that want to remain competitive in the modern world. AI is rapidly becoming a critical tool for businesses in sectors like finance, healthcare, and technology. For example, AI is transforming customer engagement by providing personalized experiences and recommendations, which drive higher satisfaction and loyalty. In finance, AI is helping institutions like JP Morgan Chase improve risk management by analyzing vast amounts of data and identifying patterns that humans might miss. This enables quicker, more informed decision-making and reduces operational costs. Looking ahead, it's clear that the potential for a global recession remains a significant risk, especially given the complex interdependence of global markets and the fragility of economies facing multiple pressures. However, AI is poised to be one of the most influential technological advancements of the coming decade, driving significant change across industries. AI's ability to optimize operations, enhance decision-making, and transform customer interactions could lead to massive productivity gains. In finance, AI will likely reshape everything from risk management to fraud detection, creating more efficient and secure systems. However, this technological transformation comes with challenges. The widespread adoption of AI will likely lead to job displacement in certain sectors, particularly those reliant on routine, repetitive tasks. This could exacerbate social inequality unless proactive measures are taken to retrain displaced workers and provide them with opportunities in new, AI-driven industries. Governments and businesses will need to collaborate on workforce development strategies to mitigate the negative impact of this shift. From an investment standpoint, companies that are early adopters of AI will likely see significant growth, particularly in industries such as technology, healthcare, and financial services. AI-driven companies will enjoy a competitive edge through greater efficiency, cost savings, and innovative products and services. Investors who recognize this trend early and allocate capital to AI leaders like Microsoft, NVIDIA, and IBM stand to benefit from the technological revolution. Moreover, AI's potential extends beyond business efficiency. It is also likely to play a critical role in addressing global challenges such as climate change, healthcare shortages, and cybersecurity threats. AI-driven solutions in these areas could create new investment opportunities while also contributing to the broader good. In the near term, however, the global economy may continue to face turbulence. High interest rates, geopolitical tensions, inflationary pressures, and rising government debt will weigh heavily on growth. While AI represents a beacon of hope, investors will need to carefully navigate the complex landscape of risks and opportunities. In the long run, AI's transformative power will likely reshape industries, but the path forward will require adaptability, strategic thinking, and a long-term vision for sustainable growth. If you enjoyed this, don't forget to like, comment, and subscribe. Your support means the world, and it helps us keep bringing you more great content. Plus, I'd love to hear your thoughts. Drop a comment below.